That's not what's happening in metals, though. Metals is in focus, and we're speaking today with R.V. Gumaste, Managing Director at Kirloskar Ferrous Industries. Mr. Gumaste, sir, very good morning to you, Mr. Gumaste. Thank you so much for speaking with us. And let's just start with the, I think, big story or the big move for you this year, which is merging your companies into a single entity in 2024. That's with Indian Seamless Metal Tubes, ISMT. Tell us the kind of synergies that creates.
Yeah, we acquired Indian Seamless Metal Tubes, or ISMT Limited, in March 22. And immediately after acquisition, we had already announced that we would like to merge this entity into Kirloskar Ferrous Industries Limited. It makes sense because it's a forward integration for our Pigaran business. We look forward more and more integration coming forward with setting up of the steel plant in Koppal plant to supply the steel blooms to Baramati plant. I think from many angles, we are going green power in ISMT that can go for the steel making. We are looking at complete integration and bringing the value chain, starting with iron ore mining, going up to the seamless tubes. I think it makes good sense to merge these entities, and then at the earliest opportunity, we went ahead and merged. We had confidence on turning around this company, and we could turn around the ISMT to profit in first quarter. And we had no doubts that it's a valuable asset to run it as an integrated entity within Kirloskar Ferrous Industries.
Tell us about, you talked about the green energy in ISMT helping. Tell us about the solar project, which allows power cost reductions. What is that pegged at for the combined entity?
See, we are looking towards the opportunities on solar and wind, complete green energy. Not only from the cost angle, cost is very important, and today solar and wind have become competitive. But we have huge commitment to going green, reducing carbon emission, and to take the steel to green steel manufacturer. I think from both aspects, I think it makes a huge sense to expand our green energy footprint. We have gone ahead with the 70 megawatt first, and half of it is commissioned. The balance 35 megawatt will get commissioned in October, November. And by the year end, we will go to 100 megawatt. I think we have already contracted to complete 100 megawatts before the end of this financial year. Going forward, we would like to expand to whatever level we are allowed to use the green power, especially the solar. I think today's regulations permit us to go up to 74% of our requirement, and we are committed to moving in that direction. We have already started investments into wind power as well, because these are complementary. The monsoon months, we generate more wind power and less solar power. We would like to bring that blend so that we increase our share of green energy in the total energy consumption in steel making.
What is the kind of impact that we will see on margins as these green energy initiatives help reduce costs, and by when?
I think it's quite dynamic when we are looking at the opportunities to cut cost. Customers are also looking at how our cost can come down and they can get the benefit. I think it's going to be a very, very substantial impact. Currently we are at power and fuel cost of 15-16%, and we intend to take this power and fuel cost down to 6-7% over the next 2-3 years.
Just want to understand your production targets right now, Mr. Gumaste, and if you are seeing any impact in what we've seen in commodity prices. Overall, we've seen commodity prices zoom because of what we've seen in China in the last couple of days. This cycle might improve and increase. What is the kind of impact you see for you?
No, the first part I will cover first. The commodity cycles you have seen last 2-3 years, there's no bottom at all, and it just kept going down. Even though the input raw materials did not go down that much, but the metals prices went down. And we were keen on to see where it stops and we get some support. I think last maybe 1 week or so, we see some support coming for the steel scrap as well as for the metals and pig iron and steel. And I would see end of the monsoon should improve the construction activity across India, and some demand for the iron and steel should revive. I think that support is very essential because really the metal prices have gone down, especially the iron and steel.
So what is the kind of price bump up that you expect?
Right now, I am able to see on the pig iron and steel about 2,000 rupees per ton support coming. How much will sustain, whether it will further go up, we have to wait and watch.
No impact on demand as a result of that?
The demand, rather, whenever there is a price increase, it's a clear indication of demand improvement. So I expect that with the price improvement, the demand improvement will also happen, and we should be able to sell all our products and run all the 3 furnaces full blast.
Let me come to the targets, guidance and targets that you have set out for FY25, Mr. Gumaste. So your production capacity target for pig iron, for example, is at 1.5 lakh metric ton, volumes of 54,000 to 55,000 metric ton per month. Are you on track to achieve this for this financial year?
We got some setback in the Q1, but Q2, Q3, I see alignment in the volumes. We are running all the blast furnaces and we are able to sell. But this 1,50,000 sales now includes the sale to ISMT steel plant Jejuri. So our external sales of pig iron today is of the order of 43,000 metric ton per month. Because after the merger, the ISMT sale is internal transfer.
Okay, and in terms of guidance for casting and tube, are those also on track?
I think there has been a smart improvement, especially for us in the casting business. The demand has improved, though auto industry and tractor are subdued. But so far we have been able to hold on to the volumes, improved volumes in Q2. And we are looking forward that with the festive season, some support should come and Q3 and 4 should become better. And except the Q1 volume, what went low, other should get normalized and we should go closer to the targets.
Are you seeing a pickup in Q2 volumes in the auto space?
Yeah, definitely, definitely much better than Q1. And there have been very big challenges on sustaining those levels. And but as you know, we are into very special castings and not general products. And we are finding slightly better volume stability than actual market condition.
Okay, thank you so much for speaking with us. R.V. Gumaste, the Managing Director at Kirloskar Ferrous.